All right. So, close, well, a few dollars off the market maker's expected move to the upside for today. After testing the low, fortunately we didn't open below where bears could have had a slight advantage, and bulls took that opportunity to sell the spike in volatility pretty hard. I do think most of that vol shorting is in the near term, but for now it offsets the damage done by the downgrade on Friday. Uh, futures closing, well, futures flat right now, but holding up above the 59.74 support. Might lose this with the Moody's downgrade. Came in after hours. We probably want to hear from one of the other ratings agencies right about now, though, and see if we're going to see debt downgrades from either Fitch or S&P. That would probably impact things a lot more than just Moody's. Yields pulled back today, surprisingly. But the gains in the dollar did subside into the end of the day. Dollar down 60 points, particularly against the euro and the pound. However, it did lose about 55 points of ground against USD JPY. Remember, Dixie is kind of euro heavy. Commodities fell back today, although precious metals outperformed. And oil actually rose. Looks like some of the less significant sectors did not perform as well. Correlation today, and this is kind of weird, correlation didn't really move back to Friday's levels. So there's a breakdown in dispersion following the Friday close that has not recovered. Correlation on the 1 month up 17% today. And actually starting to turn back up into the end of the day. We're also getting past earnings season. Remember, there's only about like 8% of the S&P left reporting. Some that now Nvidia is part of that. Don't forget, but that sorry, my allergies are killing me right now. If those don't go well, there could be some decline in dispersion, which means that the market makers will be dumping delta on the underlying positions on SPX, which could drive volatility down on equities, up on the indexes. We're not quite there yet, but it is kind of turning around a little right now. Leverage on the carry flat over the day, although intraday, quite a lot of leverage built up until about 9, 10 a.m. this morning. It started falling back off again. Bond volatility fell back below 100. I don't think today's move does anything, but there is a bump up in 3-month correlation. Generally, bond volatility will follow suit with that after some time. Skew, Friday showed a little bit of out of the money demand for puts, but pretty sure that wasn't very significant. And correlation between VX and cash VIX fell pretty sharply today, about 3%. One of the, I would say, largest moves that we've seen in that correlation since, well, for quite some time, since back in like early April. This is likely just shorting the shit out of the overnight gains and volatility. Breadth, kind of picked up on Friday. I doubt it did very much today. Fed fund futures still priced at around 14.5 points by September. What did hold and kept up was the bear steepener, up 7.74%. Definitely a pullback from earlier today when it was up above 50, but still a move in the right direction for the bears on that. We did get a new high today. However, we've still failed to break over the March high, which is at 59.86. What's that on the monthly? It's not really that relevant, but Here, you know, the failure to test what is now a wider rising wedge, um, and failure to test the upside resistance. That's right. It's like right around that March high now. So we'll be looking for those two tests to the upside. Failure of 59.47 to the downside, significant. That level held as support throughout the back half of the day. And then below that, we'd be looking to like 58.78, 58.37 to the downside as key support levels to confirm any kind of reversal. I would expect that if we're going to see weakness due to the Moody's thing, we'll probably see it in the back half of this week, especially given the Bears didn't reposition very strongly today. So it might be another day of like chop tomorrow, like rise and chop, with like maybe some distribution out into the back half of the day, and then Wednesday, like following the expiration, Wednesday, Thursday, we might start to see some volatility pick up as the near-term gamma falls off and the market's a little bit more mobile. And I think that's about it. So thank you guys for tuning in. I'll see you bright and early tomorrow. Hope everybody has a great night. Later.